Welcome to the weekly update. Today is Wednesday the 27th of January. Well, this week we've seen global risk aversion dominating sentiment in the foreign exchange markets, and there's been a lot of talk about the fact that that's driven by Obama's proposed bank regulations. But I don't think that's the case at all. I think really it's much more to do with China's reducing its bank lending, trying to control its economy, and the likely flow-on effects that might have to global growth and growth in the Asian regions. As a result, we've seen the US dollar stronger again against most currencies, and the Japanese yen a bit stronger as well. This is likely to continue for a little bit longer, I think, in the short term. But overall, I think China's efforts to control its lending and prevent the housing market turning into a bubble in China is actually positive for the longer-term growth in China and the rest of the region. So we don't see it as a long-term negative. In fact, I would consider it to be a long-term positive. In the short term, you're going to see currencies like the Aussie and the Kiwi pulled a bit lower as global risk aversion dominates sentiment. But ultimately, I think we're going to see that reverse, and we still expect the US dollar to be weaker in the medium term. And I think the other obvious candidate is the Japanese yen. It's been stronger again over the last couple of weeks, but fundamentally there's no solid reason for the Japanese yen to be this strong. And I think once we see global risk aversion start to dissipate, then the Japanese yen will come under serious pressure. In terms of positioning of the fund and our Asian currency positions, as I said, short Japanese yen when we see this global risk aversion start to reverse. We still like the Korean won, although their GDP numbers were a bit worse than expected, but we still see them tied to China's growth and higher exports. So we still like to be long the Korean won, probably short against the Japanese yen or the US dollar. The Aussie dollar we're slightly more cautious on just at the minute. But again, I think long the Aussie, short the Japanese yen for the medium term is a trade that we like. And the Indian rupee, again, I think is another trade that we see in the medium term. The rupee going much higher, inflation's picking up in India, and I think the authorities there will start to use the currency more to control some of this price inflation that we're seeing. So certainly long the Indian rupee against the US dollar. And then finally, we remain long the Chinese currency against the US dollar. There's not much happening there, but again, I think if we see China trying to regulate the flows into its economy more and control some of this money supply, then the currency is an obvious candidate to improve those measures to assist them to control their economy. So I'm not quite sure when it's going to happen, but we certainly expect an appreciation of the Chinese currency over the rest of 2010. That's all for this week, and we'll be back next week with another update.